All right, team. It is that time. Happy Thursday to you. Been a tough week from just a busyness standpoint. That's why I haven't been on the mic. But, oh my goodness, do we have some hot ones for you today. There's a lot of stuff to talk about. There's just a lot going on. And this is definitely one of those times as we are in the fourth quarter. We've seen a super, super hot market. And, how are we going to adapt to this? How are we going to where are we going to go from here? That's really a big question right now. So I don't think I'm going to be able to share this. Doesn't look like it's working. All right, so be it. So what happens next? And that's really the big question. So we're going to start with interest rates today. We're going to go through real estate. We're going to go through some of the top stories. We're going to look at a couple things that'll blow your mind. And we're just going to give you a ground level perspective of what the heck is going on out there. Being someone who works with buyers day in, day out, what are they thinking? What are they doing? I can tell you a few things. First of all, buyers are a little bit hesitant, not excited. They're not rushing to get stuff in. So there's a little bit of fatigue there. We'll show you that in the numbers. And interest rates, you can see this chart right here. This is a terrible looking chart. This is as bad as it gets. You don't want your investment account to look like this. This is mortgage bonds. Remember, we want to see this action right here. We want to see mortgage bonds going higher so that rates will go lower. That is not what we're seeing. What we are seeing is overall trending lower. You see it almost channeling perfectly here. Let's see, it would be easier to draw it this way. Channeling lower. Not good. Not good. We got a lower channel. The only hope we have right now is that we appear to be, there appears to be some sort of support right here that maybe we can double bottom off of and head higher. But there is just a whole litany of resistance up here. I mean, so many lines of resistance. This is one of those situations where when you get into escrow, you go ahead and lock. And if you're looking to refi, certain circumstances, it still makes a lot of sense to pull the trigger before savings are completely gone off the table. But, you have to take a close look at this and say, does the risk reward make sense? Maybe it makes sense to wait till it gets up here. We get another 100 basis points and you get into the middle of the mess and then go ahead and pull the trigger. But rates are still really low in certain circumstances. So what's very interesting right now about this particular interest rate market, and I'm going to go ahead and do a little promo here for myself. This interest rate market is really interesting because certain types of loans, certain types of loan to value, certain credit scores haven't really been affected by this at all. And there are others, like lower credit scores, where this has been affecting quite a bit. So it's not a linear equation. There isn't a cascading effect that is predictable across the board. If you have questions you want to go through, if you're looking to buy or refi, give me a call, shoot me a text, send me an email, and I will hook you up. Now, so I don't have good news on the interest rate front. I just don't. If you're a buyer, rates are trying to hold on, but you can see the channel. It's definitely heading lower. This is the slow, rise of interest rates that we've sort of been talking about for a while now. Now, as far as the San Diego market is concerned, very interesting stuff going on. I love this Altos research. So there's a few things on here that everyone should really, really take note of. First of all, 81 on the seller's market index. Last time we did this, I think it was 90 something. It got all the way to 99 at one point. Last month was at 84. This month, 81. So this is houses. This is not condos. This is houses. Still, 30 is a buyer's market. In between there is somewhere a balanced market. We're a long ways away from a balanced market, much less a crash, which everyone keeps talking about. It's so crazy to me. So inventory also been decreasing. So let's take a look at a couple of these things. Look at the market action index here. Hopefully you can see what I was saying there. Over here, in June was 97. It's just been declining down to 81. So you're seeing a little bit more of a balancing in the market, which is good. Inventory, though, relatively flat, but it peaked up here in July, got to 592 and now down to 513. So inventory has been on a steady decline since July. So that's interesting. You're seeing some homes relisted. That is up about 50% from 12% to 18% number of homes relisted. And you're seeing more homes getting price decreases. This is a result of sellers most likely not listening to their agent, pricing their homes too high, trying to go for that number that they really want from the very beginning. That's a hard game to play. So now we're seeing almost a third. That's a pretty big number. A third of homes on the market getting a price decrease. 1 in 3. That's a big number. Average days on the market, you can also see that ticking up. In mid-June, we're at 29. Now we're at 41. So just a few things like that. But what do I always say is the truth serum? What is the one thing that doesn't lie? Price per square foot. Price per square foot was $581 back in June at $600 now. So still trending higher. What does this mean? Why am I telling you all these little things? Because you can see a lot of these things point to being good for buyers. In other words, for prices to be steadying, to be coming in a little bit, to be relaxing, for there not to be a mania and this crazy bidding wars. You're seeing price decreases, relistings, but inventory is down. Okay, market action index down. That's all good. But price per square foot is still climbing. The title for this video, I'm not sure of yet, but it might be, does a slowing market mean lower prices? A lot of people think it does. What we're finding out right now is it does not. The market has slowed down. There isn't the same mania we had a few months ago. Price is still going up. Why? It's the inventory situation I've been telling you about all year. It's so big. It's such a massive shortage in supply. It's years and years worth. Here's another thing I want to show you. Median rent. Okay. Median rent back in July for houses was $3,025. Now it's $3,200 and it got to $3,300. So you're seeing rents are just, and here's the main reason why: most landlords don't realize how much they should be charging for rent. They don't realize it. They don't know what's really going on. They don't know how much they could be getting. They think they're doing themselves a favor by increasing the rent $100 when really they could probably increase it $400 or $500 for that new tenant. If you own a home and you put it up for rent, put a crazy number up there. You'll probably get it. That's the kind of market we're in. So there's that. So now we've looked at rates, have an idea. Oh, I want to show you condos real quick. Here's another indicator. So you notice the market action index for condos was at 79 last month, at 80 this month. So moving more towards the seller's market. We're seeing more people go in this direction. So more people are choosing to go to the condo or the attached versus the detached. You're also seeing some of the same things over here as far as price decreases are concerned. Not as much, but you're still seeing it. Price per square foot, very solid, very solid. And then market action index, very flat. Median rent increasing quite a bit. $2,400 in mid-June up to $2,700 today. Guys, that's just a few months. When I tell you that rents are going to be insane, it's going to make people puke in the next couple of years, I'm dead serious. That's what's going to happen. If you have a cool landlord, that's great until they decide to sell the house or pass away or whatever and someone else takes over. They're going to whack you, and they're going to be able to do it legitimately. So just keep that in mind. Inventory, the other thing on this one here you can see is inventory has decreased significantly since June. We were at 569. Now we're at 424. So we've seen a lot of inventory come off of the attached table, and we're creating more of a seller's market there as people spill over from the detached market into the attached market. Pretty interesting stuff. It really is. It's interesting stuff watching that sort of unwind. Now, if we look at just a pure business perspective right now, there's a lot of uncertainty about things. People are starting to hesitate a little bit. You're seeing a lot less risk taking, but it's not stopping Wall Street from buying homes hand over fist. Huge funds, and I confirm this from the horse's mouth. Huge funds buying massive amounts of properties in motion, still taking place, all cash, over ask, craziness. Now, not really as much in San Diego, although it's still happening. We have Zillow buying properties here, Redfin's buying properties here. There's some iBuyer programs that are buying properties here. But in like Vegas, Arizona, Utah, they are buying unbelievable amounts of real estate. As I told you why, bond replacement. That's what's happening. So it's going to continue to happen. Expect it to happen. Do not expect that you're going to get some sort of discount on real estate. If we do, great. But most likely, it's not happening for several years to come. Been an interesting couple of days. Bitcoin is up nicely. We'll take a look at that. Dow Jones today rises 337 points. This is what we call a short cover rally. I'm not going to spend a whole bunch of time on this, but I don't want you to fall for this trap. So they're making you think that, oh, the market rallied today. No. There was a lot of shorts that got put on because, the government's having trouble staying open, and there's a lot of friction there. The president's having a hard time passing his economic agenda. And whenever that happens, you end up in a situation. Let me see if I can move this. No, can't move it there. I got to move myself, get myself out the way. Whenever you have a situation like that, it starts to breed a little bit of fear, and the shorts come in and they think they can take easy money, and they have been. They just covered today is all this is. You see the cover right away and then flat. But overall today, it deteriorated, just slowly deteriorated throughout the next day. We were up 500 and something points at one point today. So it got up there, double topped, and then just deteriorated. That's not really a rally. You know what I mean? That's not what that is. That's just some short covering and then the market settling back in. We'll see what happens tomorrow, of course, but don't expect that. Don't fall for this. Oh, the Dow rallies 300 points. Come on. There's a couple good things. We're going to add this to the list. So on the Bitcoin front, some very, very interesting things. So we have a senator who discloses the Bitcoin purchases. So buying some Bitcoin. So Republican senator from Wyoming bought up to $100,000 worth of Bitcoin. Oh, but that's not all, team. That's right. Got him. George Soros Fund owns Bitcoin. The CEO of the fund confirmed it. It's funny to me because he said we have some coins, but not a lot. How subjective is that? It's funny because when you talk to people who have different economic backgrounds, they'll say, "Oh yeah, I just put a little bit on it." Like I just bet, just like Michael Jordan, you say, "Oh, I just bet a little bit on that game, 50 grand." I wonder what some coins, but not a lot means for them. But it's a big deal to disclose it. And this is a reason why I bet they own a ton. I bet they own a ton of Bitcoin. And this is their way of saying it, but not giving up too much. You wouldn't want to tell anyone you own a ton. MicroStrategy is one of the few companies that's publicly traded that has admitted to it. You wouldn't really want people to know that because you wouldn't want to get a target on your back if you're these guys. And here's what he said. He said, "I'm not sure. Let's see, make sure I'm not in the way. I'm not sure Bitcoin is only viewed as an inflation gauge here. I think it's crossed the chasm to mainstream. Mind you, Soros and his people are very well connected to the government. We've heard just this week, both Gensler at the SEC and Yellen at the Treasury, both have said no plans to ban Bitcoin. And really, you can't ban Bitcoin. You could try to ban the way that you get paid off Bitcoin, but you can't really ban Bitcoin. Even in China, they say, we banned Bitcoin. Why have they had to do it 10 times? Because you can't ban it. You have to ban the internet to ban Bitcoin. Fitzpatrick went on to explain how cryptocurrencies now have a market value more than $2 trillion with over 200 million users. And he's right. He's right. But this is a big deal. And I've said this before, people who are worried about Bitcoin getting attacked. Listen, there's people with a lot more money at stake, with a lot better lawyers than you and I have, who have their money and their chips on the Bitcoin table. And if regulators try to do something funny, these companies, which are all regulated by those regulators, would have a lot to say about it. So we've got some protection. And I think that is another good thing about Bitcoin, which, by the way, was up to 55,000, now right back down around 54,000. Ethereum is on a tear. I don't think either one of those can be stopped. I don't know about the rest of them, but I think Bitcoin, Ethereum, it's a good idea to have some exposure to those. I know I've been saying it forever, but I'm just telling you. All right, this guy. So Jeremy Siegel says the Fed may taper faster than expected, which could spook the market. That, to me, is something that is one of my concerns. Okay, so when we talk about legitimate concerns, remember the Fed went from, no, we're not going to do anything. We are not even going to consider tapering until things get much better. And then the following meeting, just a few months later, they said, we're going to taper this year. So there's clearly a lot of pressure to taper. And so this may be coming, and it wouldn't just spook the market, it would crush it. I mean, look back at that chart. Talk about tapering the purchases of this stuff. Well, look at it already. This isn't just fragile. This isn't just thin ice. This is, I guess you could say this is the thinnest ice layer you could imagine that this is holding on to just barely. This looks like a continuation lower. It does. When you have the previous cycle low right here coming up as resistance, right? That's just a continuation. Drop down below, come back up, retest, and then fire lower. So this thing is already set up to crash. Our interest rates are set up to spike heavily as a result. And so we don't need a faster taper. That wouldn't be good. So I'm looking at that right now. That is really the biggest thing that I'm looking at, is how quickly is that going to happen? Is this guy right about the acceleration? We've seen the acceleration in real time just based on what they've said. Very, very interesting. Oh, I wanted everyone to see this. I'm going to put this link in the description. Read it if you want to. Department of Education. If you have student loans, there's a public service loan forgiveness program, and they are trying to revamp it and do more stuff with it. So just check it out if you have student loans and that makes sense to you, or that's something you've looked into. This is scary. Pfizer asks FDA to authorize COVID vaccine for kids 5 to 11. Why? Why? Someone explain that one to me. Here's what's interesting to me. The news couldn't come any sooner for parents anxious to get their children vaccinated. Show me the line of parents who are anxious to get their children vaccinated. Where is that line? This is propaganda. This is just BS. This is Pfizer paid bullshit. So, yeah, I'm sure this parent was just dying to have her son vaccinated. Anyway, so, the vaccination thing ain't stopping, and no one wants to talk about it. I'm going to make a video about it soon. We're going to talk about it. The biggest issue we have is that they're not talking about natural immunity. There's 2 ways to be immunized, right? You can be immunized organically by getting it, like I did, or you can be immunized with a vaccine. And but there's no reason to vaccinate people who've been naturally immunized. That's ridiculous. And it's just a profit grab, and it's gross and disgusting, and I can't believe that it's happening in our lifetime. But that's what's happening. So be careful. Make medical decisions that are good for you. Don't be forcing anything. Do what you have to do. Okay. This is getting all the way to the Supreme Court. You can count on that. But anyway, there's a whole lot of stuff around vaccine pushing that's going to continue to happen. In fact, I just heard that they're talking about bringing back a malaria vaccine that's supposedly new and improved that they're going to roll out. We're going to all be vaccinated to hell is what's going to happen. So anyway, main things right now on the real estate front are fragile interest rate scenario. Okay. Buyers, a little bit timid, even though prices continue to climb because of our lack of inventory. Is this creating a buyer opportunity? It very well could. I think rates would need to go up a little bit more. And then we would see potentially some buyers fall off, and then we create more of a balanced market. And that's kind of what we need. We need to be looking at like high 3s or maybe 4% interest rates. That would really take some buyers off the table and allow, the market to correct itself a little bit. If we don't get that, then most likely we're going to just continue to see prices slowly and steadily climb. Price per square foot. Keep an eye on that. Watch the price per square foot. That's the graph. The only thing that really matters is price per square foot. Just keep an eye on that. Okay. And you can see it here. This has been a really nice looking graph. See nice growth, level up, little growth, level up, and then nice growth. And now we're leveling again. We've been leveling for a while, but what happens every time we level on this graph? Every time we level for a little while, every time we're flat for a little while, then we level up. Flat for a little while, level up. Now we're flat for a little while. What happens next? Anything could happen. But I think we're going to see higher prices and a lot of disappointed people who are waiting for prices to decrease. So listen, I wish they would too. I'm trying to buy real estate every dang day. What's up, Ollie? What's up, Anthony? I'm not sure what you're referring to, but hopefully I covered that. Yeah, everything's different in different markets. So we talk about the San Diego market. That's the one I'm very familiar with. A couple other ones I follow, Las Vegas and Henderson very closely as well, because I'm looking at properties out there. And I follow, of course, Southwest Missouri, where I'm looking to buy, would love to buy a lot of properties. But it's just been tough. It's been very, very difficult to even get in. I mean, I made an offer last week, full price, no contingencies. I didn't even get a counter, That's where we're at right now. So just keep that in mind. And I don't think it's going to get any better, but I hope it does. So everybody have a great night. Give me a call, shoot me a text, send me an email if you want to buy or refi. And I look forward to seeing you guys again soon. Have a great night.